entrepreneurs, Joe DiChiara, CPA extraordinaire, coming to you live from downtown Metro Manila for another segment of Learn to Earn business strategy, tax strategies, and marketing input based on my 40 years of accounting experience and over 50 years of being an entrepreneur. That's right. I started when I was 10 years old. I set up a casino on my driveway, and I've started, failed, succeeded in plenty of different types of businesses. And actually, I'm on my fourth type of accounting business. So I want to invite everyone, just in case you have any questions, comments, or you'd like me to expand on one of these episodes, because my promise, my goal is to give you these important tips and facts in less than 15 minutes. So let's get on with it today. Today, I'm going to talk about something that I've become a real expert in, something that I've been extremely successful in, and it has to do with removing penalties and applicable interest on any kind of tax, workers' comp insurance policies, disability insurance. Just because you get hit with a penalty doesn't mean, number one, that they're right. And number two, even if they are right, there is something in the code, the tax law, called reasonable cause. Reasonable cause. And there's all different types of situations. Each situation has to be looked at on its own merits, its own facts and circumstances. But there's almost always a way to get interest and penalties removed, unless it's for late payment of taxes. And also, sometimes when people are late, we can go back and amend the return, because the assumption is that the return that was filed was correct. So, for instance, let's say you filed your return, you owed $5,000, you didn't have the money, and you paid it late. Or you set up an installment plan, which is tomorrow's episode. We're going to talk about how to set up an installment plan with the IRS. So you paid the money, now you get hit with interest and penalties. We could review the return and see if it was in fact accurate. If it wasn't, if there was a mistake and we could reduce your tax liability, guess what? When the liability goes down, the amount you paid will come back to you, plus, not only plus the interest that you paid, the penalties that you paid, but the IRS will also pay you interest. That's right. And also, this doesn't only apply to the IRS. It applies to any state and local tax. It applies to payroll taxes, sales taxes, any kind of tax that there is. So also, I've used reasonable cause and facts and circumstances to get hundreds of thousands of workers' comp penalties removed. So just because you get a notice, a lot of times people get notices and just pay it. Now, case in point, one of our clients has a partnership in the state of Florida, and for some reason now Florida is really putting down the hatchet and trying to get people to file returns, people that don't even owe taxes. So some politicians, somebody in the tax department said, hey, we can raise a lot of penalties and raise a lot of money just by telling these people that they didn't file a return. Even if they did, even if they did. So a lot of times, especially since COVID, the government, primarily the IRS, has become totally inept at processing returns. So in this particular case, uh, our client, actually a college buddy of mine, got a penalty from the state of Florida, $300, based on the fact that they said he didn't file his return. Now, my advice was, don't pay it. Let me look at it and we'll see if you do owe it. And even if you do, we might be able to invoke the reasonable cause uh, situation. Okay, and I'm going to tell you what reasonable cause is in a second. Well, he went ahead and paid it. Okay, so we looked. He didn't give us a chance to look. And the return was, in fact, filed and accepted by the state of Florida. How do we know this? Because it's in our tax program. When we file a return electronically, we get a notice that it was accepted. If it wasn't accepted, it gets rejected. Now, if it was rejected and we filed it on time, that would be reasonable cause. Okay. Why was it rejected? A lot of times they just reject them for no particular reason. Don't ask me why. We get this all the time with the IRS. And then when they get rejected, we got to file a paper return. And then the penalty notices come. I even had a case where we filed returns. We filed, I think, 4 years worth of returns. The client went to get an SBA business loan, and the transcripts came back that he hadn't filed. So I had to go to what they call the taxpayer advocate. It's sort of like a government agency that they're the IRS watchdog. And we're going to talk about the taxpayer advocate in one of these sessions. So the thing is, we got acceptance. Now, all of these returns were filed on time. Okay, I might have misspoke. I was thinking about another client, but with this client, we filed 2021 on time, 2022 on time, and 2023 on time. And we got the acceptance. And so we were shocked. And now what this did was it actually prevented him from going for the SBA loan. You have to be in compliance. So I get in touch with the taxpayer advocate. Now, years ago, when you got in touch with the taxpayer advocate, they would usually get back to you within days. Well, the way things are now, it literally took them months to get back to me. So I said, we filed these returns. They were accepted. We filed them all on time. And this is what he said to me. He said, even though they were accepted, doesn't mean they were processed. Doesn't mean they were processed. The only option that we had was to file paper returns. Paper returns. It takes them forever to even process a paper return now. So we sent it in, we mailed it in, they processed it, and guess what? He got hit with late filing penalties. Over $2,000 interest and penalties. Now, I told him I can get the penalties abated, but it's going to take some time because the IRS they don't do anything quickly anymore. He decided to pay it because he said he really needed to get the financing, and if he paid it, it would show that he's in compliance. So, what is reasonable cause? And I have a lot of case studies, a lot of different situations that happened where I was able to get the penalties abated. My success rate is off the charts. It's probably like 98 or 99%. And the reason for that is if I don't have reasonable cause, I'm not going to say that I do. I'm not going to make up facts. That's how you get into trouble. But when there is reasonable cause, I will definitely put the wheels in motion to get the penalties and interest abated. So again, let's talk about what reasonable cause is. And this came from the courts. Okay, people challenged the IRS, took them to court, and said, listen, there's a reason why this happened. There's a reason why we file late. So here's the lowdown. And if you have these situations, you will get your penalties abated. Number one, and this, I've never seen this happen, but if you get advice, information from the IRS that turns out to be wrong, you can get the penalty abated. Well, guess what? The IRS doesn't do that anymore. Okay, they don't give out instructions, and if they do, you have to jump through a lot of hoops. So that's off the table. Reasonable cause, a medical issue. Okay, I was in the hospital when the return was due. It was beyond my control, and there's certain language that you have to use. Now, if you would like, we have a template. I actually have a template to resolve these issues. And if you would like a copy of the template, all you got to do is just email me, joe@bedrockbusinessbuilders.com, and let me know that you watched this episode and you'd like the reasonable cause penalty abatement template. So what else is reasonable cause? So medical condition, a natural disaster. Guess what? COVID was a natural disaster. We'll be using COVID for years. Another example is we had, for that client that we filed, I think it was 3 years, he was late because COVID hit. His accountant couldn't be found. So we had to do 20, 21, and 22, 3 years worth of returns. Well, guess what? The IRS totally messed up the filing. They took the 2019 return and literally posted it to 2021. Again, this client was going for an SBA loan. He couldn't get it because according to them, the returns weren't filed. Okay. Go to the taxpayer advocate again, and guess what? She blamed it on COVID. Now, we had filed these returns way after COVID had ended. Okay, we filed them in 2023. So if the IRS can use that as an excuse, guess what? We can use it as an excuse. So we got medical, natural disasters. There was a fire. All our records were destroyed. Something like that. There was a theft. Somebody stole all of our records. Circumstances beyond the taxpayer's control. Last but not least, you relied on a professional, a CPA, an enrolled agent, an attorney to file the returns timely. They didn't do it. Believe it or not, sometimes I blame it on myself. I'm a professional. The client, the extension got stuck in the system. It was beyond my control. The client was under the assumption that the returns were filed, blah, blah, blah. We get the penalties abated. That's our story. We're sticking with it. Thank you. We're under the 15-minute mark. So thank you, and reach out to me.